Some huge news today about inflation makes stock rise at market open. As you can see, the S&P 500 rose 1.82% at market open. The Dow Jones raised 1.57% and the Nasdaq even rose 2.29% at market open. Hi guys, and welcome to our very first video on this channel. If you like the content that you see, please leave a like and consider subscribing to never miss another video. As you can see, the inflation rose 8.5%, but even that was less than expected as inflation pressure eases a bit. So that was the exact reason why stocks were rising today and still are, because the inflation is better than expected, even though it's still absurdly high. The consumer price index rose 8.5% in July from a year ago, below expectations due largely to slumping energy prices. And as you can see, excluding volatile food and energy prices, so-called core CPI rose 5.9% annually and 0.3% monthly, compared to respectively estimates of 6.1% and 0.5%. The report was so good news for workers who saw a 0.5% monthly increase in real wages. So basically that means there was a worse inflation expected. It was 8.7% was expected if I remember correctly, and there was only 8.5% posted, which means there's a better than expected inflation rate, and that means stocks are going up because 8.7% was expected and the stock market adjusted for 8.7%. That means the stock market is always ahead of the news. And in this case, the news came out and it was different than expected, and then that's the reason why stocks were rising today, and we saw some good numbers at the market open. So prices that consumers pay for a variety of goods and services rose 8.5% in July from a year ago, a slowing pace from the previous month due to largely to a drop of gasoline prices. On a monthly basis, prices were flat as energy prices broadly declined 4.6% and gasoline fell 7.7%. That offset a 1.1% monthly gain in food prices and a 0.5% increase in shelter costs. Economists surveyed by the Dow Jones were expecting headline CPI to increase 8.7% on an annual basis and 0.2% monthly. And like I said, that was 8.5%, so it was kind of a beat on the numbers that we were seeing right now. Over here you can see a graph about the consumer price index, or the inflation that we're talking about, on a 2-year basis. So in January 2020 you see there was a 2.5% and it dropped a bit in the months after to 0.3, 0.1%, which is really good or really low. Usually you will see something around 1 to 2%, which is a normal, usual inflation rate. However, from March 2021 or April 2021, you see a huge spike in the inflation rate, all the way up to the point where we are right now at 9.1 or 8.5% in July. So at this moment we are seeing an 8.5%, which is better than expected, and that is why we see the stock market rise. And some other interesting things here is about the food. So excluding volatile food and energy prices, so-called core CPI rose 5.9% annually and 0.3% monthly, compared to respective estimates of 6.1 and 0.5%. So even there you see a small beat on what was expected. And then the year-over-year change in the consumer price index, less energy and food. So you can see that was a bit lower than the overall inflation, which is a good sign. And then I will scroll down a little bit because most of it is not really important for the stock market. It is kind of important to know what, but it's about what certain parts of the economy were rising more and faster than other parts. But most importantly here, what we see, the chief economist Jeffries said, things are moving in the right direction. This is the most encouraging report that we've had in quite some time. This is of course a very good news for everyone in the stock market, but also for just the average workers, seeing that their money isn't getting worth less and less. It still is, but it is worth less than that we did expect. So that's about the inflation rates in the States, but now let's see why the inflation is so high. So there's an article here at the BBC talking about why the inflation in the US is so high. And in short, it's mostly because of the demand in certain things. So as you can see here, the government spending, and it was driven by the massive $5 trillion approved to shield households and businesses from the economic shock of the pandemic. By cushioning family finances, the aid, which included direct checks to households, helped people keep buying. Goods like furniture, cars and electronics saw a surge of orders as shoppers redirected money they might otherwise have spent on restaurants and travel. And as usual, high demand collided with supply issues stemming from the COVID. Businesses raised prices. So what we saw is that there was a lot of cash available because people couldn't spend it. They were getting more money from the government, not able to spend it. So they spent it in electronics, cars and furniture. And because there was such a huge spike, but less supply due to COVID, there was a huge gap in the supply and the demand. And that's why the prices rose really, really hard. And then even there you can see the US is still kind of ahead in, as of most countries' inflation, because most other countries in Europe and around the world were sitting a bit lower in inflation rates. As you can see, the US is at 8.5%. Only in this rate, Spain at 9.8 and Brazil at 11.3 are up above the US in inflation rates. So this is the reason why stocks are up so much today. It's because the inflation rates are better than expected, and also we might see a downtrend from here onwards. Thank you so much for watching, guys. Feel free to leave a like if you enjoyed the video. Make sure to subscribe to don't miss any other videos and comment on this video so we know what you're thinking about this subject. Thank you so much for watching and see you in the next video.